the forex summary and possibly look at other corrections to the strategy in New York trading section. I would like to first of all look at it from the daily perspective, and let's look at it from the weekly perspective and draw clear insight into what weekly structure looks like on weekly time frame. It is important to look that as time goes on in trade, you realize that pattern reoccur. In an uptrend, you are looking for W structure to continue going up. In a downtrend, you are looking for an M structure to see an opportunity to sell down. Both of them can be used in both case scenarios. I mean, there is no particular rule that is set for anything in trading. For here, you have a demand floor, a broken demand floor on weekly, and what happened? Price came back, retested it, and this is the genesis of all the bearish war we are going through right now. The genesis of this problem started from here in the month of April after that retest on a weekly time frame. This is a free giveaway trade. That is why it's important to start from a higher time frame, from monthly. On monthly, I've done analysis on monthly. Go check my Wanda post on monthly charts and market calibration. So the next thing to see is another structure that is broken on a monthly time frame is okay, see here, we also have here break of a weekly structure followed by a retest, another sell. Then we have here break of a demand floor. On a lower time frame, you will find a retest here and will still continue to sell. We have here break of a weekly demand floor. Look at the retest candle, boom, and you see. So markets follow set of rules. There is a break and retest here. So look at the candle that retested that weekly breakout on a weekly time frame. You see here, this is a support structure. So break of that support structure, price came back, retested it with a little liquidity and went down. So that is what it is. Then let's look at if we found other support structure on weekly time frame. On weekly time frame, the market is bullish on a weekly time frame. We have not done anything wrong on weekly time frame. No invalidation of analysis. On weekly, we are bullish on weekly time frame. On weekly, we're on support. We've not broken structure on weekly because at the moment the market is sitting 3992 is a weekly support. We've not broken that yet. So until we break weekly support, then I will expect what happened here to happen again. What happened here after break of a weekly support structure? Then you see that candle came back here, and we had a beautiful retest. So as much as I want to see gold return into 3,400, I'm not going to make that up. It's not up to me. I'm not a hedge fund, neither am I a commercial trader, but I'll follow a set of rules. So if that happens, then we'll know what to do next. But for now, it is what it is, that the market is sitting on a support. So technically, nobody knows the outcome of the FOMC. But from what we see, if we have a volatile FOMC and it turns out that it favors the commodity price surge, then most likely where it makes sense to wait for price will still be on weekly support around 4,481. And if you scale down to daily time frame, you will see that on daily time frame we have had candle do something more than that in a single day. So if we have a favorable condition for market, it's also possible to predict that market can have such rise in a single day. The highest drop we've had in a single day is a drop from 5,436.31 into 4,684.41. And if you measure the distance, you can logically say that if we have a favorable market that goes in favor of the yellow metal, we can also have that surge. So what it means technically is that a surge from here can move you back into this structure. So this is technically a very strong area to wait for price on a weekly time frame. On a weekly time frame, that's what it means. So monthly, let's see if we have a structure on monthly. We don't have much on monthly, but we'll have a candle rejection with a very strong wick, and the following candle, the middle of the candle, creating a very strong decision, and that's also a retest point. And we've seen the next month candle from April. April was a sell signal. It was a sell signal after the break of February. So technically, let's look at it again on weekly time frame. If we have an explosive FOMC, most likely we can see that price will most likely come somewhere around here. You want to sell, you want to place your sell order on a sell structure, right? If you want to sell, you need to be in a sell structure. This is a sell structure we have here, 4,723. It's also possible in a single day. This is achievable. So if we still look at the outcome, if the market is rising explosively, I don't want to rush into it. You wait for rejection. Rejection is allowed. Rejection is allowed. Look at a full daily rejection. This is a full daily buy rejection. So the market might move into this since the commitment of trade shows that net commercials are short. So they could pump in money to push the price of good and sell it down. This is how the market rules. So let's look at it on daily time frame. See, on weekly, we've already discussed weekly. On weekly, we're in a good hand. We've not broken structure on weekly time frame. So what this technically means that this weekly support is our weekly support. So it is stronger than what daily candle is telling you. So as long as the weekly bias holds, buyers still have a say, and that is why you see market playing on that floor until you see that floor broken. We ain't going nowhere. And the next thing I see, that price might pick liquidity here, somewhere around here. And this week is very important. This is a weak rejection that happened. I'm looking at it with a very potential eye. The reaction here in the month of October 2025. So price might dip itself depending on the outcome of the FOMC. You might see price dip itself into that structure. So we anticipate possible areas of market reaction, potential market reaction zones, as in a worst case scenario. So I see there as a potential buy floor based on what price has done here in the month of October 2025, Tuesday. So you could see price dip itself into that structure, and you see market turn it into an instant buy. These are W structures. The market is forming series of W structure, telling you that there is a possible upswing coming. If you look at here, another W structure. This is the neckline of that. The two W structures we have. It's not invalidated. The W structure, break of neckline. Okay, we bought another price, W structure, neckline tested by Thursday, and we are seeing a surge in price. And today candle, yeah, though rejected, but it's still showing very strong promise. So our floor is now valid, and this is the most preferred floor, 3,891 for me. And today price action can be seen on 4 hours. You switch on your line chart, you see that on 4 hours price has formed a clear head and shoulder chart pattern. That head and shoulder chart pattern, this is the neckline. This is the neckline. And the next 4 hours support. I discussed this during the early hours of today, and this has represented the two critical market positions we have today, and the litmus test has been set. So what it means technically is that in the future, a breakout of this structure is a buy confirmation. A break below is a sell confirmation. It's very simple. Trading is very simple, and if you don't use too much complexities. So the roadmap has been set on 4 hours, and on intraday, 4 hours is the strongest time frame. A breakout from here will most likely pull the market down, and a breakout from this structure on 4 hours time frame will also call for retest, and we see price go up. So the market has set a litmus test. So it's up to us now. We are playing between 4,114 and into 4,067.48. The two reactions happened here in the early hours of my lecture today. If you listen to it, you will see I said it exactly this way, where I married 1 hour time frame, 2 hours time frame, 3 hours time frame, and brought 4 hours time frame and went back to 45 minutes to look at the similarities and where market will likely react. And it ended up like that. So this is what we have for now. The market has created a very beautiful structure, and this happens to be our our demand floor for now. Let me not put this, let me reduce the width. So this is our critical demand floor on 4 hours, which is the strongest time frame on intraday, after which you get 3 hours. Both of them are very strong. And sometimes when you are looking for how to play with intraday time frames, you look at even numbers, that is 2 hours. Yes, you look at 2 hours. So if 4 hours is too cumbersome for you, you can scale down and wait. So this is the trade we have here. So we have 3 floors. So we'll continue to see what market does. A breakout from 67. I will tell you the next buy floor where you should wait for price is here. You wait for price here. This is where you should wait. This area is very critical for me. So if price returns here, I will tell you for free. For free. This is a free trade that here is a buy. So I'll tell you for free. This is a buy floor. So based on what we have here, the price comes here, here is going to buy. Then to go back to retest a broken demand floor, which is a 4 hours demand floor that was broken 4,067.48. It will retest it, come down, take away that structure. Now, depending on the momentum, if it's a momentum that calls for bullish rally, price will break back. And a break back here will nearly take this away, and we align with another structure. We have a structure here. There's a very beautiful structure here. You can see that structure. A very beautiful structure. Two buy structures, breakouts. When price return here, retest here, and you can see it. And from there we drop. And we can also, whichever way you play around it, you're right. This is also very right. This is also right. A W structure. Price came back here, retest the neckline of the W structure, break of the neckline, followed by a retest, and a retest form an M structure. Break of the neckline of the M structure, and you've seen a sell. And that M structure you see there is valid for potential sell, and that is why you see that on Wednesday price has dropped. Price didn't drop on its own, it dropped because market formed an M structure, and on that M structure, that is neckline. So it came back to retest the neckline of the M structure. The retest has happened once and happened twice. So it was on the second retest of the neckline of the M structure. That is a double top structure, a bearish price action, and you have seen price drop. So there are key signs that every trader must begin to look out for. Not every trader, including myself. You look out for M structure, you look out for W structure on different time frames, especially if you are trading intraday as a day trader, you are looking out for 4 hours and 3 hours M structure and W structure on 3 hours and 4 hours time frame to make a critical trading decision. So this is what we have here, and that was how price reacted there. It reacted not, it was not a fancy thing, it was following the structure of the market, and this is an M structure. Break of the M structure, price came back, retest it. You see 166 was a bearish call, and price came back to retest it. It's still valid. So what it means technically is that if price returns their breakout of that structure, then we'll set seal, use it as a demand floor, and we go up. And we have seen that oil price has been retreating after multi-day highs of and the US peace Iran deal is coming to a reasonable conclusion, and as a result of that, inflation concern, it's also being monitored by monetary policy teams, both from the Federal Reserve and MPCs of, Bank of England. So we hope that the next FOMC is going to set a clear directional bias for the direction of USD, especially the DSY, and also give us a clear view where the US 10-year Treasury bond yield is headed. We have here a structure, a very beautiful structure. We have here a W structure. Here is a retest to the neckline, breakout of structure. There is a clear break of structure, and this is a retest, form an M structure, break up the neckline, sell. Price return here to respect the neckline. Let me put it into, into context. This is neckline. So that's a neckline. That's a neckline to that M structure, and you see what price did there. So it's still valid that if price comes back there, you still want to take it. So at the moment we are playing, the trade has happened. You see that if price returns back into 120, you sell it. Yes, there might be a possibility that price will return into 120, you sell. If price comes back into this floor, 67, you buy until you have an outright breakout. So if you break out, you go up. If you break down, you sell. So I'll be watching it from a professional perspective, and this is what you have using Shavyfxhub strategy, in-house developed, back-tested. And I'm not saying it's 100% perfect, but I'm only saying that you are going to learn something. That's all I'm going to say. You're going to learn something. Every time you watch my chart, you're going to learn something new. And I have come to a very strong conclusion that the market is calibrated. So for every time you see a buy or a sell, there are people that already know where market will buy and market will sell based on my calibration strategy. Based on calibration strategy. And if you feel this is not true, come to the comment section and tell me it's not true. Then I will take you on a free round trip on a 20-year price action to show you market calibration. Yes. So if you feel it's not true, I will take you on a 20-year price action tour, especially for SAU USD. I will show you for silver. I will show you for copper. And moving forward from tomorrow, we'll be discussing four major metals we have in the commodity market. We talk of gold, we talk of silver, we talk of copper, we talk of aluminium. And as time goes on, I will introduce titanium. So I hold bachelor in engineering in metallurgy engineering. So I have interest in metal, and most likely in the future open up a foundry company. Most likely, a few years from now, I own my own foundry. So that's what we have for now, and it's good that every time market is over, we make a summary. The day is over. Let's rewind. Let's wait for price. So we have minimal charts, and the market has set a forward guidance for us. So I want to see a breakout or invalidation of the um, head and shoulder pattern. This is a head and shoulder pattern. I want to see an invalidation. Once you see an invalidation, then I set up for buy. Invalidation of this structure is a buy, and a breakout from this structure is a sell. So it's a very simple, very simple. Trading is very simple, and is based on patience. Patience is the biggest strategy in trading. There is no strategy that supersedes the other. Let nobody talk you down of your strategy. If you are trading indicator and you have mastered how to use indicator, continue with indicator. If you are doing Fibonacci and you are doing well with Fibonacci, continue with Fibonacci. If you are using Elliott wave and you're very good in Elliott wave, use it. Those who are doing fair value gap and who understands fair value gap concept and doing all those smart money shit and the rest of all the things that have a whole lot of grammar, and you're doing well in it, continue in it. Whatever you are doing, the most important thing is mastery. I will tell you for free. Master your strategy. That is all I will say. I won't say it two times. Whatever you are doing, mastery is what you need. And here at Shavyfxhub, our goal is to attain 100% market accuracy or nothing. If it's not 100%, then we are not going to stop until we attain 100% accuracy in the financial market. Then we'll know that we have done a good assignment. So close the day. Have a good day. Bye bye.